Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 31st of July. It looks as though the market ready to end the month on a high note. We had the break of RSI 55, which we were looking for since the end of May, and that was the leading indicator on the breakout. We're also looking to break that resistance line there from the end of May, 82.80, and above that we had the target 83.71, which was the brief June spike for this market. The longer we stay above 82.80, the greater the chance of a move up to the top of that rising trend channel from back in September at 87.30, and that could be hit as soon as the end of next month. Seems rather unlikely, but that's the setup that we have at the moment. And early back below the 50-day line now, 82.30 or so, really delaying the upside scenario. Ideally, we stay above that 82.80 zone. Moving on to the DAX, and I suppose if the FTSE is going up, you would imagine that the DAX would be recovering as well. And here the recovery is basically the market being back in that rising trend channel from September last year and above the 50-day line there, around 18,400 rather. Looking for a proper break now of that May resistance line there, 18,600, to take us back up to the highs, and also to give us potentially and move up towards 20,000 by the end of next month. Again, sounds rather unlikely, but while we're above 18,000 and while the RSI is above the neutral 50 level, but that just bounced, had a double bounce at RSI 50 over the last week or so, this market is looking encouraging. Moving on to the Dow, and here the picture is, I suppose, the longer we stay above the 40,000 level, the greater the chance or the happier we are in terms of the prospects for this market. You can see at the moment that we're well above the 40,000 level, and while we are above there, looking for obviously the record highs that we had earlier in the month, and then up to as high as 42,000 by the end of next month. That's the top of that rising trend channel basically from this time last year. Nightmare scenarios that we've got to test the floor of the channel there at 39,300, but that doesn't look too likely, especially given the way that we bounced off RSI 50 over the past week. Moving on to Bitcoin, which seems to be having a problem with the 70,000 level, and here you can see what the issue is. We've had a backed off from that March resistance line there at 71,000. We've got support there at the 50-day line at around 63,500, and the longer we stay above that 50-day line, the greater the chance of finally breaking through that March resistance line. RSI still above neutral 50 at 55, so feeling relatively confident despite the knockback from 70,000. Moving on to gold, and here the hopes and dreams of the bulls are basically very much alive while we hold above 2,400. We're still looking for up to 2,600 by the end of next month, which is the top of that rising December trend channel, and only back below 2380, really delaying the upside scenario. That's the floor of the channel and the 50-day line. At the moment, we've had a double bounce at RSI 50, in fact a triple bounce really if you include the early July bounce, so it does look fairly well set up. Moving on to the stocks, and starting off with Arrow Exploration, which seems to sort of spud here, there, and everywhere, given its track record, and we've managed to blow the top of that rising trend channel out at 29.5 pence. Above that, we are looking for a fresh leg to the upside, which I'd already drawn, in fact, and that would be towards the upper 30s. That line's slightly wonky, but upper parallel there up to as high as 40 pence by the end of next month. So really looking for the shares to step up the pace in terms of the upside. And the reason for saying that is the way that in recent, basically today's unfilled gap to the upside through the previous high there at 30.5 pence. Above that on an end of day close basis, 40 pence seems to be in order, and obviously it is a second gap higher that we've had in the recent past. The first one was at in the middle of June, and that was a bear trap gap reversal, and as I say very often, that tends to be a very reliable signal. On to a company with a cool name, ActiveOps, and here you can see that we are making progress within that rising trend channel that's been in place. This is the second look that we've had of the stock in the recent past. Rising trend channel, top of the channel there at £1.40, which hopefully will be done in a week or two, or even sooner than that, and then we can look for a fresh target We looked at the following stock for the first time, I think yesterday or the day before, and Celebrus is here as well, very similar to the ActiveOps chart, and looking for up to the £3.15 level by the end of next month. Hopefully it'll happen a bit sooner, and ideally we remain above the 270 area, basically just below today's support zone. Very pleased to see electric guitar rise off the back of today's news, and you can see that we were already looking for the shares to rebound. It was the sort of second or third time of asking, but the initial target here was the 50-day line there, and the top of that rising trend channel base from June, around 1.1 pence, and hopefully we'll get to that over the next week or two, while we remain above resistance on the way down at 0.83 on an end-of-day close basis. The gene drivers must be enjoying themselves today. Here you can see that we've had a touch of the 200-day moving average. As I say on many occasions, the 200-day line tends to be a magnet for the share price. Even in a bear market, we already had this market touching the 200-day line, then coming back. Obviously, there's one or two sellers in the mix, and that's why they've sold at the 200-day line. But we're looking for up to 7.7 pence at the top of that falling trend channel from October, while we remain above recent support, the recent swing low there around the 3.7 pence level. Moving on to one of the best stocks around in terms of the persistence of the trend. It's Guardian Metal Resources. It used to be called Golden Metal, but what's interesting here is what somebody said on Twitter, that 96% of the current market cap of Power Metal is composed of Guardian Metal, so you're getting the other 4%, presumably everything else Power Metal has for free. The current situation, though, is that the longer any decent end-of-day close above the second target there, around 33.5 pence, should take the shares up to as high as 43 pence by the end of next month, and ideally we stay on the right side of 30 pence. We had a gap up to start the week, and that remains unfilled, so it does look as though Guardian is ready for a fresh leg to the upside. Less high-profile situation, Intelligent Ultrasound, and here was a little V-shaped bull flag after breaking that trend line there, around 10.25 pence, looking for the top of that triangle there from this time last year as high as 16 pence by the end of next month. We've got the 50 and 200-day lines both rising there, probably a week or two away from a golden cross, and that should help the cause, as it already has on the daily chart. Don't often look at the following chart, but here we have Jaywing. The picture here is that after that was the second time of asking, we had a spike towards the 50-day line, but it looks as though this time we'll get an end-of-day close above the 50-day moving average at 1.7 pence, 1.75 pence rather, and we'll hit the 2.9 pence broadening triangle top over the next 2 to 4 weeks. But the key here is gathering as many end-of-day closes above that 50-day line as possible. I've looked at Longboat quite a lot, and it's back again with this U-shaped turnaround, which is looking very healthy, looking for the top of that triangle there from last September at just shy of 30 pence by the end of next month, while we remain above recent neckline resistance at 22 pence. Polarean is next, not for widows and orphans, and probably created a few, but we've got a potential rising trend channel base. It's not going to be easy because there is obviously a lot of supply here, given the history of the stock, but you can see this rising trend channel base now has the shares above the 50-day moving average at 1.6 pence, and the longer we stay above that, the greater the chance that we move up to 2.6 pence and the top of that June price channel by the end of next month. Obviously, if you are cautious, you wait for the main 2 pence resistance there to be broken before taking the plunge. Next up is Shield Therapeutics, and here another rising trend channel base situation, and maybe it's a sign of a bull market that we've got a lot of these now, the bombed out stocks turning around. Unfilled gap to the upside through the 50-day line, that's now rising as well, support above that 50-day line, so it looks as though the top of that rising trend channel from April at just shy of 3 pence could be on the cards by the end of next month. Quite confident about that after that move through a rising 50-day line. On to the last two. First one is SRT, which I've looked at quite a lot as well. Here we've got Higher lows above a rising 50-day line. That suggests that the initial target here at 37 pence is in the bag over the next 2 to 4 weeks. Also triple bounce for the RSI on neutral 50, so that's a very, very strong leading indicator. So 37 pence first over the next week or two, and then maybe by the end of September up to 50 pence plus at the upper parallel, or the top of that broadening triangle there from last October. Finishing off with Verici, which somebody on Twitter seems to be very enthusiastic about. Looks like they may be right in the sense that we've gapped through the recent resistance around 7.5 pence and heading for the long-awaited move towards 9 pence in the top of that triangle there from back in April. Upside value while we hold above that 50-day line, just above 7 pence. That's it from me today. More updates tomorrow.